In 1987, the legislature passed a major highway program that was designed to bring a 4-lane highway within 30 miles of all Mississippi citizens. Not only did that open up the roadways for us to be able to travel the state easier, it also opened up the opportunities for economic development and commerce, and I think Mississippi has benefited from it greatly. So, what do we do next? The study says that we really need to make sure we are preserving that system, that we're maintaining it, that we're putting the effort, the investment into the system to make sure that this system lasts, because it will have a major impact on our economy. And today we have a wonderful panel that will be talking about that, and we're really excited about it. We have Dr. Paula Dowell from Cambridge Systematics, who is an economist who really looks at this all across the country and the impact of it. We have Rodney Grogan from MMC Materials, a company that supports the construction industry at all levels, but more importantly, understands the importance of moving goods. And of course, Mike McCormick, who is president of the Mississippi Farm Bureau, because as we know in Mississippi, agriculture is such a major part of our economy and something we need to always be thinking about how do we continue to grow that and support that industry. So we have a great panel to start this morning. We're really excited about it. We know this is an issue that's important to a lot of people. We have seen that over the last couple of years as we have begun to talk about this on an almost daily basis across the state, and people understand that the investment into transportation is an investment into our state that will pay big dividends. We're going to kick off this morning with Dr. Paula Dowell, who has 20 years of experience in cost and economic analysis. She is a partner with Cambridge Systematics. In fact, she leads their National Transportation Economic Practice division. She served as a project manager, senior manager on projects in all parts of the country, including states of Michigan, North Carolina, Georgia, Mississippi, and Texas, taking a look at how this really is such an important issue. So please join me in welcoming Paula Dowell.
Out of those 20 years of my experience, I've worked for at least 16 years off and on with the Mississippi Department of Transportation, so it's always good to be back here. Feels like I'm always among friends here. So what are we going to talk about today? Well, why does transportation matter? We all kind of take it for granted because it's just something that's out there, but let's take a little deeper look about why it really matters. And then what are some of the opportunities from investing? All around you, states all around you have been successful in really passing legislation and getting new funding for transportation, and they've been increasing their level of investment, decreasing some of their backlog of maintenance and preservation. So we're going to take a look at what some of those returns have been. And then what are the costs of falling behind? We worked with Mississippi DOT on their long-range transportation plan a year or so ago, and we took a deep look at this and in understanding what are they able to do with their existing revenue stream, and then what does that look like in the future if they don't get additional, more adequate funding. And then how does Mississippi position? What do you really need to do to really make sure that you're not falling behind not only the other states in the nation, but the other states within the Southeast as well. So transportation is really our economy in motion. Whenever we start to think about freight transportation and the movement of goods, that's really about trade and commerce. And talking with a lot of stakeholders throughout the nation, one of the best lines that I've heard is that someone saying, I don't make a trip unless I'm going to make money or I'm going to spend money. And both of those are economic transactions. So when we think about transportation, it really is one of those key factors to production. And so people travel, they're going to make money, they're going to spend money. When freight moves, it's moving because someone is buying that, whether it's here domestically or whether it's being exported internationally. Businesses need it to keep their assembly lines going. We need it even in the service industries. So think about trying to get your customers and your clients into your business and get yourself out to business meetings and all. And so for each and every industry, it's important and it plays a role. So in terms of transportation costs, it impacts the cost of doing business. So it can reduce your access to labor. So the more congestion there is, then the more travel time that is. And most people decide their commute not based upon the number of miles they're willing to drive, but how much time are they willing to drive to get back and forth to work. And so as you have congestion, if you're not keeping up with that, then what you're doing is really decreasing your effective size from which your businesses can and draw from a labor force. And we all know that access to labor is one of the #1 business location decisions. And so if your workers are having to commute further, then you're probably going to have to pay them a little more to entice them to your businesses. So it reduces your access to labor, and it can increase your cost to labor. Can also lead to higher freight costs. And this isn't just about congestion, but it's really about the condition of your transportation system as well, because that leads to increased vehicle operating cost and increased travel times. And all of that gets factored into the cost of freight, the cost to move goods, moving supplies in, moving your final product out. It can also lead to higher inventory levels. The more congestion you have, the less reliable your system is, then the greater the risk of stocking out. And in these days, all of our manufacturers are trying to run on just-in-time manufacturing, and they're trying to keep those inventories as low as possible because that's how they keep their cash flow going. That's their business model, and that's their unit of economic competition. And so transportation really plays a factor into that, and it can lead to those higher risk of stockouts. But it's not just about business. Business isn't the only one that benefits from transportation. It also impacts you and I in our everyday living. It impacts the cost of living. It impacts the cost of goods and services. If it's costing more to move goods, that's going to be rolled into the price. Whenever you think about your grocery items, a lot of the cost on some of your key items, such as your milk, your products, a lot of that is transportation cost. When those costs go up, then the price of those goods are going to go up. So it costs all of us, not just businesses. And it also leads to higher commute and travel costs for us. It leads to increased travel time for us, but the vehicle operating and our maintenance costs, the wear and tear on our vehicle is a lot more whenever we're driving on poorly maintained roads. The importance of logistics has been traced. The Council of Supply Chain Management Professionals, every year they release support, the State of Logistics Report, and it really tracks what companies are spending. These numbers are from the June 14th, but they've released the latest one of June 16th, and I got a snippet of some of the numbers, and we're seeing a similar increase that we're talking about here in terms of the carrying costs being up over 2012 by about 2.8%. Well, in 2016, they're up about another 2.8% over the 2014 cost. And the total transport costs are also up around just over 2% in the 2016 over these 2014 numbers. So in total, logistics costs keep going up. And so we know that that's going to lead to increased cost of business, the increased cost of living. It's also important to understand that this isn't just about businesses and industries that are moving large amounts of freight. So this looks at your industry clusters, and it looks at their relative dependence in terms of the different modes. And you can see your highway mode there. Most industries across the board have a really high dependence upon highways. And it's not just your big manufacturing industrial industries, but you look down there at tourism and recreation. That's all about getting access to your tourism assets and the ease of mobility. And so they have a really high dependence upon highway as well. But it's not just about highways. It's really about a comprehensive transportation system and really making sure that you can meet the needs and demands of your industries, whether they be goods producing or whether they be service industries. In terms of site selection location factors, we can see survey after survey, you can see that highway accessibility ranks high, and it ranks higher and higher, especially given the fact that we've moved to such a trade-based economy. And so we do have really far-flung supply chains. We have supplies coming in from all over, and we're serving customers, and our final demand gets sent all over. And so that way, access is important, but it's not just about having access to a highway. It's about having access to quality highways. And states gain reputations about the way in which they maintain their infrastructure, and that sends a signal about their commitment to the business industry. And so a well-maintained roadway system and an infrastructure and a commitment to that sends a signal that the state is a more business-friendly state, and they've made that commitment to industry. So what is the return on transportation investment? We've heard a lot about a lot of projects, a lot of big projects get done, and they're termed build and they will come, and the economic development doesn't follow. But what we've seen is there's far more research out there that really demonstrate that there is a positive return on highway investment. Whenever you look at the national research, you'll find that the positive impacts on economic outcomes, and particularly on productivity and output, it really helps us be more productive as workers workers. If we have a more seamless, a less stressful, a safer commute, it's going to make us more productive when we get to the job. There's tons of research on that, but it also increases the productivity of our freight assets from our carriers, from our truck drivers. It increases the return on their investment on their capital equipment as well, and just overall industry. These effects have been shown to be both direct. They directly affect you and I. They directly affect individual businesses, but they also have those ripple effects as well in terms of creating overall economic activity and benefits. And again, it's not just the quantity and the availability of the infrastructure, but it's really about the quality of the infrastructure, because that impacts our overall service. And transportation has effects far beyond just the geographic area in which they're located. And that's been demonstrated time and time again, that making investments, such as making investments to access at the port, it can really help suppliers and businesses throughout the state. I did a study a few years ago on the economic role of ports within the state. And it was shown, you only have a handful of counties that have a port facility, but every county within the state had a port user. They had a business that benefited from the ports. And so those benefits of those transportation assets really ripple throughout the whole state. So we actually went back and we did some case studies. In my opening remarks, I mentioned that a lot of states all around you have already been successful in terms of passing additional funding streams for transportation. Two of those states are Georgia and Arkansas. So in Georgia, there's a couple different acts that passed. The first was the Georgia Transportation Act, and that was in 2012, and that actually allowed regions, so it was groups of counties, to come together, and it was a voter referendum on whether or not to pass an increase in tax for transportation. And so there were 3 regions throughout the state that voted for this, and so since 2012 they've actually started implementing some of those projects, and so we're going to show some of the results from that. But also from a statewide perspective, they passed the Transportation Funding Act of 2015, and then that's going to raise about $1 billion annually statewide. Now, I live in Atlanta. I can tell you what congestion, what the state of good repair and everything, and the impacts it has. And in terms of taking advantage and just assuming that transportation has already been there, we've been hit with the hard reality with the collapse of the I-85 bridge. And then a week after, we had the big upset on I-20, which was one of the major reliever routes. And whenever those were both taken out for a day, I mean, we're really feeling the pinch of that from all the residents, the visitors, the businesses, everyone. And it's not just the downtown that's feeling it, it's the whole state that is starting to feel it. Even the port is having some ripple effects from that. And so once again, we take a lot of our transportation assets for granted, and it's not until something happens that we really kind of have, the big light bulb goes off and says, we can't afford for these assets to go out of service. And then in Arkansas, they passed the Connecting Arkansas program, and that was improved in 2012. And that was really like a contract with the voters. Again, voter referendum. We're seeing time and time again, when you put it out to the voters, they're voting for this. They understand the importance. And I'm going to show you some poll numbers from Mississippi that demonstrates that the voters here also understand the issues. And so this is about $1.8 billion in additional revenues over a 10-year period, and it's tied to 36 specific projects. So with the Georgia Funding Transportation Act of 2015, we actually did some work on this. This was about catching up on the maintenance backlog and advancing some of their delivery of some key capacity projects. But the biggest bulk of this transportation funding was really about catching up on the maintenance backlog, because they knew there was no federal relief coming from it. And so we looked at a couple different scenarios for them. We looked at their historical spending level. So if you took what was their existing revenue streams and you continued with just those revenue streams, what would the impact of that be? Well, we estimated that just continuing with business as usual was going to cost drivers between the 2015 and 2040 an additional $26 million in direct transportation costs. It was going to cost commercial vehicles an additional $477 million, just in additional travel time and vehicle operating costs. So whenever you start to look at that, and I'm sorry, this was just vehicle operating costs, didn't even include the travel time, an additional $503 million just in additional fuel and maintenance and wear and tear. However, with this new revenue spending and the ability to really catch up on some of that backlog, the return of that, not only were you going to erase that loss, but you were going to gain an additional savings of $20 million in vehicle operating costs and $382 million for your commercial vehicles, for a total of almost $403 million. So if you combine that with erasing the loss, you're getting almost $1 billion worth of savings in terms of vehicle operating costs from this new revenue program. In terms of jobs, what does that mean? Whenever you're saving in terms of your transportation costs, again, that can help make your economy more competitive. So the estimate was, under the business as usual, it was going to cost a job on average, about the state, 2,180 jobs annually on average, and that would equate to about $270 million in terms of gross state product, the overall size of their economy. By making the additional investment, not only did you not lose those jobs, but actually you're going to gain an additional 1,750 jobs above and beyond the forecasted growth, because you're becoming more competitive, and that's on an annual basis. So going back to the Transportation Investment Act of 2012, these projects have already been implemented, a lot of them. And so it passed in the 3 regions. The Heart of Georgia region was the one who really had the most to gain from it, and they've completed, since the passing of that, 286 of their projects. The Central Savannah area was another one of the regions, and they've completed 13 significant expansion and reconstruction projects within their region. So how are they faring in terms of some economic indicators? Well, whenever you look at this is tracking the unemployment rate, and this is for the counties that are within those regions that have passed this Transportation Act and have been improving and catching up on their backlog of transportation projects, and their unemployment rate is down by 50% since 2012. Now, is transportation the only thing that's leading to that? No, our economy's been picking up, but whenever you look at these regions, this isn't the metro Atlanta regions, which really has been witnessing the biggest gains in Georgia. These are in your more rural regions, and they are able to reduce their unemployment. So whenever you look at this is Richmond, and this is in the Augusta area there, and you look at the annual residential business permits. So it's not just about unemployment and jobs, but you're actually attracting more people to the area as well, and so the residential construction is also taking off. In terms of significant business investment, this is just a listing of some of the most significant. And you can see there within the Richmond, you've had 250 jobs, a $67 million investment there. In the Heart of Georgia region, when you look at that, you're starting to look at some significant investments. These are not only expansions of existing industries, but they're actually attracting new industries from other states, actually relocating within the area. And when interviewed and talked to, the transportation investment and the systems were key determining factors in this, and the planned set of projects that were going to get funded through this additional investment act. For the Connecting Arkansas program there, again, it was 36 projects, and they included widening and improving about 200 miles of highways and a projected cost of about $1.8 billion. About 30% of the projects have been completed to date, and those completed projects are located in Northwest Arkansas, Little Rock, and Northeast Arkansas. So how are these paying off? So again, looking at the unemployment rate for those regions that have been completing these projects, it's been the unemployment rate has decreased by 40%, and a lot of that is being attributed to not only just the construction activity and the fact that you're having that direct impact on employment and putting people to work, but also just in terms of some of the business expansions and the relocation of businesses to these areas. 40 companies have located and are expanded in the regions with the increased investment. And so here you'll see a breakdown. Little Rock, you're getting about 7 with $200 million directly invested. South Central, 11 businesses with $6 billion. Again, the Northwest, 13 different expansions with $600 million and 2,000 jobs created. And the Memphis and the Northeast area there, in the West Memphis area of Arkansas, 9 expansions with $400 million. And this has all been since that announcement of those and the completion of those projects. So once again, just some additional things here. So, you know, the list keeps going. So you have 40. So these are some of your new plants. So these weren't just expansions. They were actually some new plants coming in. And again, significant in terms of direct investment. So those are creating, again, direct jobs for the construction activity. But then you have your long-term employment too once those factories and once those expansions come online. So what are some of the opportunities in Mississippi? Well, whenever we worked with the Mississippi DOT and we completed the 2040 long-range plan, one of the things that we looked at was if you just keep the existing revenue streams that you have, and we project that out to 2040. That's the light blue line there. So you can see a relatively flat revenue stream that the state can expect from existing revenue sources. What you need in terms of the additional revenue to actually catch up on your needs, and this is really about maintenance and preservation. There's very little capacity in new roadways in there. It's not even really new roadways. There are some widenings and some additional lanes, but very few, like under 15 projects. This is really about maintaining. So it's about your pavement conditions, it's about your bridge conditions. So some of the annual gaps, and this again is just focusing on the highway needs through 2040. So if you were to maintain, just to maintain your existing conditions, you have a gap of $241 million annually. Just a gap of maintaining existing, not even improving those conditions, but not falling further behind. But if you really want it to meet your minimum performance targets, which is really having 75% or more of your state-owned pavement conditions in good or better condition, and having 95% or 98% of your bridges not structurally deficient or obsolete, you would need about an additional $510 million a year to meet those minimum performance targets. So this is really critical. So think about it, not doing anything, business as usual, means that things are going to get worse. So we did, at the beginning of this study, we actually had an outside surveying firm come in and do a public opinion survey. We had over 1,400 responses statewide. We made sure that it was a statistically valid survey so that all regions within the state, both urban and rural, were represented on this. Some of the big findings that we had here was state funding adequate? And whenever you look at that, over 50% agreed that it was not adequate. And then does transportation benefit the economic, the Mississippi's economy? And there, I apologize. When you see the strongly agree and agree, again, you get close to 75% of your residents here understand that connection between transportation and the economy. And finally, highway conditions impact my cost. This was to residents, not businesses. So even residents understand, again, either strongly agree or agree, you have over 75% agree that the highway conditions impact their cost. So this signals that the groundwork is there, that the people understand the importance of this. And then we asked them, what should Mississippi's top 3 priorities for future transportation investment be? And these are the top responses here. And we've broken it out here for your MPO, which are your metropolitan planning organizations. So those are your urbanized areas, your rural areas, and then statewide. And overwhelmingly, the top number for when you look at all 3 categorization is maintain what we have. So they understand that you're falling behind, that there's a need to really maintain and improve your existing infrastructure. And then you can see from an urban, you start to get improved safety. In the rural and statewide, it's really about road connectivity. So again, that really ties to economic activity as well. So we also wanted to understand the trade-offs. It's important. It's not enough just to say we need more money. People need to understand, what are we going to get? What's the return on that investment? So again, under the expected spending scenario, which was just focused on your existing revenue stream at the existing rates that you have, right now you have about 60% of your state-owned system that is in fair or better condition. If you just maintain your existing revenue streams, that's going to fall to 47%. Less than half of your state-owned system is going to be in fair or better condition from a pavement conditions perspective. If the adequate funding scenario, again, if you increase that to really meet those performance targets, then you go from that 60% to at least 75% of your state-owned system is going to be in fair or better condition. So what are the economic implications of this? So we took a look at the economic implications of your alternative highway investment levels. And again, this is focused not on building new roads. This is focused on really meeting your performance targets in terms of your existing. This is about preservation, maintenance, and modernization of your existing conditions. So under the expected funding, it's estimated that vehicle operating costs will rise by about $34 million between 2015 and 2040. Your travel time delay cost would be about $7.8 million. Motor vehicle crash costs, about another 1.1, these are billions, I'm sorry. And then your total cost, about almost $43 billion in additional cost. The average driver is going to pay about $650 more per year in terms of travel time, maintenance and preservation cost, and safety cost and insurance cost under your existing revenue stream. If you increase your funding and you have adequate funding to really meet those targets, you're going to see that you're actually going to have a savings of vehicle operating costs nearly $29 billion, travel time delays about $33 billion, your motor vehicle crash costs reduced by about $700 million, and your total cost about $62.5 billion, which would be on average for Mississippi drivers a savings of $1,200 a year. And whenever you start to look at how much would it cost, it's much less than that. So when you look at the benefit cost ratio of this, not only is it a positive benefit cost, your benefits far outweigh the cost at the statewide level, it outweighs for the individual driver as well. So in terms of the economics, what does this mean in terms of our overall size of our economy? Under the expected, you're looking to lose on average about 51,800 jobs. Not losing the jobs that you already have, but those are jobs that could be here if it were not for these additional costs. Then that translates to income of about $95 billion and an overall gross state product of about $80 billion. Under the adequate funding, it is projected you would grow by 77,500 jobs more than what you're already projected to grow. So not only would you meet your growth forecast, but you would actually exceed that growth forecast that you have. And that would translate into about $158 billion in terms of additional income for Mississippians and about $123 billion in terms of your overall size of your economy. So the takeaways from this is that transportation is essential to all business models. It doesn't matter what industry you're in, it's going to be an important component. For some, and the next two speakers are going to talk about some really on-the-ground impacts that they're suffering through. So for some, it matters more than others. Providing efficient access to your markets is key. To your supplier markets, to your final good markets, to your labor markets is key for those business location and expansion decisions. A seamless multimodal transportation system is becoming a more competitive, critical competitive element. So we've always seen highways be really important. We're seeing not only highways, but the rest of your transportation system today being more and more important in those location decisions. Maintaining a state of good repair is critical to maintaining your economic competitiveness. And falling behind has real consequences. It has real consequences for the economy, but it has real consequences for everyone's pocketbook.
This has been the Mississippi